My name is attorney Devin Shanley with Peterson, Burke and Cross. Today I'm going to be talking to you about the child tax credit for 2021. I know, taxes, right? Who would want to be talking about that? Especially when we talk about taxes and another favorite topic of a lot of people, divorce. Hey, doesn't that sound awesome? But it is an important thing for us to learn about, and today is a great day to be getting some of the background about that because to my understanding, the President of the United States is going to be talking about an economic plan, and part of that is going to be what this child tax credit is, and let's talk about what that means for potentially you. But as a background for all of this, again, my name is attorney Devin Shanley. I am an attorney with Peterson, Burke and Cross. I am licensed in the state of Wisconsin to practice law, so the law that I'll be talking about primarily is Wisconsin law. For all of you out there who are joining me live, hey, it's great to have you join us. Please feel free to ask questions if you have that. If you are going to try and ask something later or you have a question that pops up in the video, please message me either through the Facebook page or give us a call at 920-831-0300. I would be happy to help you out. If you are watching this and you are not in the great state of Wisconsin, hi, thanks for joining us. If you have a question about this and how this affects your action, I highly recommend you talk to an attorney in your area. Nothing that I'm going to talk about today is meant to be legal advice. I will talk about some general strategies. However, I do not mean that to be exactly in your case. If you have questions about your specific case, I highly encourage you to call our office at Peterson, Burke and Cross so we can perform our conflicts checks and be able to give you a more specific answer for your exact case. Today we're only going to be talking about general information and a couple general strategies that might work. Again, if you want something very specific, I highly encourage you to talk to one of the attorneys here and schedule an appointment. So, what is the child tax credit? Well, quite simply, it's a credit on your taxes per child. Traditionally, that has been at about $2,000 per child. Now, this year, it's going to be a little different. But before we start getting into how different it is, we need to talk about something else that a lot of people don't necessarily talk about when they're talking about this, especially in the context of divorce, and that is federalism. I mean, not only are you getting tax information, but you're getting like 9th grade social studies. This is amazing, right? Federalism is the concept in our government where we separate the governance between the federal government and the state government. That's right, Americans who don't like government, you get two governments for the price of one. So what that means is this. As we look at what in the 10th Amendment, health and welfare of the citizens, that is something that is reserved for the states. Everything else in a very limited, well, not everything else, but in a very limited capacity, there are specific forms of powers that are given to the federal government. The general idea about this is we want as many decisions made on the local level as possible and not have a faraway government in Washington, D.C. making decisions across the country. That kind of works and it kind of doesn't, and it's become complicated over a couple hundred years, but generally that is the way we do things in this nation. Why is that important in this? Well, if you are watching this and you are part of a blended family, then your divorce order, your child custody order, your paternity order is going to be something decided under the state law. So in our case, the state of Wisconsin. It's going to be a Wisconsin court under Wisconsin law that's going to be issuing this ruling about this. The IRS is going to be following law passed from the United States Congress. That's going to be federal law. In short, the Internal Revenue Service doesn't know and doesn't care about what your Wisconsin court order says about how the child tax credit is going to be paid. They have their own rules. They will follow that. And if you don't like it, and if your spouse does something contrary to that, you've got to take it up with the Wisconsin court and take it up with them there. The IRS just doesn't want children to be double counted. And that's going to be a very important part of federalism that we need to understand as we move forward and as you start to form your strategies about how are we going to deal with this child tax credit change for this year and potentially moving forward. Well, now that we've gotten a little bit of background, let's get a little bit more background about what exactly this is. As I said earlier, the child tax credit is a credit on taxes, which means it decreases your tax bill $2,000. It maximizes your refund about $2,000. In the past, this has always been done right on what's called the 1040. That would be your income tax form. It would be just a simple subtraction off the top, and you would get either a reduction in your tax bill or more of a tax return based upon this. What's important, what I would say to remember in all of this is basically it changes the way your return comes in. People think about their tax return as something akin to bonus money. It's this thing that I don't live around, and then all of a sudden the federal government just gives me free money at the end of the year, and wow, that's awesome, I'll go spend it on a TV or something silly. That's not exactly what it is. It's more along the lines of you giving the government an interest-free loan. The federal government takes what they think you'll take out of your taxes every year. They hold on to it. They don't give you any interest on it. And then at the end of the year, you go, oh, I guess we took too much. Here you go. This is yours back. It's always been your money. It's just a matter of what you believe the tax should be and the government agreeing with you most of the time. So, as we think about that, the tax credit becomes important. It reduces the amount of tax that you would have. This year, those rules have changed, both in how much you're credited and how that credit is going to occur. But since it's a credit, there's one last thing I need to talk about, and that is going to be something called the tax year. People often conceptualize this and they think, oh, well, I will, I'm going to file my taxes for this year and then I didn't pay for this year, and they think, I'm going to be doing the 2021 taxes. No, right now you're doing the 2020 taxes. That's what's due on April 15th. And so you'll be dealing with the tax year of 2020, even though it is 2021. Again, this usually becomes just an afterthought of, oh yeah, that is how that works, and you just kind of do your taxes every year, or as I will give this legal advice, I advise everyone to just do their taxes every year. It's just a smarter plan than not. But you do your taxes every year, and then, you always forget, oh yeah, it's last year, not this year. But this year that becomes really, really important, because in this year, as a part of the stimulus package that came out, the American Jobs Recovery Act, I believe, the 2021 tax year has changed. Now, instead of $2,000 per child, it is $3,500 for every child who is under 5, and it is $3,000 for every child who is between the ages of 6 and 17. That means you're going to get more money back. But the federal government didn't just stop there. Instead of saying, well, now you just got to wait until the end of the year, now the federal government will give you an advance on that. The law itself says a periodic advance, but most people think that's going to mean monthly. Most of the literature I've read says that it will start in July. Okay? Now, this is a credit on the 2021 tax year, but the IRS is going to be giving this based upon what they think you will be taxed and what your child tax credit is from the 2020 tax year. So, or the 2019, if you haven't filed your 2020 yet. So, if you filed your 2020 taxes, then whatever that amount that you made last year is what they'll compute for your tax credit for this year, and then pay you half of the amount of the tax credit that you will get for the tax year of 2021 in 2021, where normally you would get the full credit of the tax year the next year. Why is this so important for blended families? That is a great question. What this means is this. You have to understand one last piece of how divorce attorneys have tended to deal with the child tax credit. That could mean a moderate amount of money, but most of the time, when you look at these sorts of things inside of the scope of a child custody order, it's an afterthought. People would be done with the litigation. At some point, where either the court is listing off all of the things that they're just done with and they're putting together the order, and then all of a sudden they get to, oh yeah, there's the tax credit. Or people have reached a resolution and they've got a lot of time caring about who's getting the child when, what's going to be the legal placement, how are we going to do holidays, what are we going to do with exchanges, and then all of a sudden the tax credit issue comes up and it becomes a, oh yeah, and it usually boils down to the attorney looking at their client and going, do you want even years or odd years? And somebody just saying something like that, we write something down and then we put in some seemingly throwaway line of, well, dad gets even years and mom gets odd years. That's fine because there's a fundamental assumption into that. The federal government's not going to change the child tax credit, or if they are, they're probably going to change that seemingly uniform across many years. This legislation actually runs against that assumption. Right now, the child tax credit is going to be a this year only thing. Now again, I had said that the president is going to speak on this. There's some hubbub of trying to make that permanent, but that's not a guarantee right now. So there's a problem. If you happen to have odd years, you get this bonus money, but you might not. Why? Because half of it is going to be paid out in 2021 based upon who filed the taxes in 2020. Meaning, if mom has got even years and dad has got odd years, mom would claim the taxes for the child on the even year, get the full $2,000 credit for it, and then if the child is, we'll say 7, because the math is easier, then the mom would also receive $1,500 of advanced payment for this year, and dad would only get a $1,500 credit at the end of the year for the same child. Dad loses a net of $500, and mom is potentially unjustly enriched $1,500, depending upon how you see it. This presents a very interesting problem for us inside of the divorce order spectrum. How do we handle this? How do we plan around this? The advanced payment that we have, it's important to note, is a default setting. That's just, if you don't do anything, the IRS is just going to start sending people who claimed children on their taxes money, theoretically, in July. So what do we do? How do we break this up? Well, first, we have to understand that this is an order of the court. We can either agree and work something out with your former spouse or former partner, your co-parent, or you can get into court, in which case you're going to want to get into court sooner rather than later. You can have the court order both parties to defer the advanced payment and then split anything other than the previous year, or if it's adopted, just go by that normal amount. But even more important than that, I think it's really important to note about how people consider money. When you have a tax refund, as I said in the beginning, people think of this as bonus money. They don't think of it as theirs, or they think of it as just somehow when their tax return is higher, then they've gotten better deals on their taxes. It's something extra. When you start giving money ahead of time, then in the sort of credits that we're going to be talking about in the advanced payments, then suddenly it doesn't really become bonus money, it becomes a stream of income that they rely upon. Again, as we talk about switching between mom and dad over those course of the time, that might be difficult because all of a sudden, if you've got a 7-year-old, then 1 year mom is going to get an extra bit of money each year throughout the year, and then dad's going to get a little bit of money each year throughout the year. You're going to want to transition how we're going to move from this very traditional mindset of, well, it was based upon these previous years, and now we're going to get that based upon this. That might change the analysis. You're going to want to look and see how all of this breaks apart, or worse, if we can't make the tax credit permanent, then how exactly do we handle just this one odd year? Do we just say everybody defers and then we split anything over $2,000? Do we just say that person gets a bonus this year? Are we going to allow the person, are we going to split it in half where the person who had 2020 gets that half up front? These are the sorts of conversations that are going to need to occur that you're going to need to look at. And this is going to get very complicated. The last part that you're going to need to be aware of is that in previous years, the child tax credit was a straight $2,000 no matter what. Now there is a phase out. So if you make too much money, you will actually get less money than you would have gotten otherwise. Or if we look at a family unit, depending upon how much mom makes and how much dad makes, will depend upon who maybe should get the tax credit or who can claim the children. If you have a family who's making $150,000 a year, then they're going to, if they make above that, they're going to make $50 less than the child tax credit for every $1,000 that they make over. If you have a single person, then you're going to get, then the number is set at $75,000. So what if dad makes $160,000 a year and mom makes $30,000 a year? Well, then as a married couple, they're going to make $190,000. They're going to lose a significant chunk of that child tax credit. But if they're married filed separate in the divorce year, then they could, or maybe they just decide to do that in general. Then you could say, well, dad doesn't claim the children at all. Mom always claims the children, but then has some sort of offset on the father's child support, or maybe there's some credit back. And then you can maximize the amount of child tax credit that the family gets across the entire spectrum. All of these questions are pretty new, and all of these questions are not totally answered about how this is going to break up. But it's important now to start thinking about this and realizing how this potentially dramatic change in the way we deal with something that was previously an afterthought is going to affect you and your family. The best thing you can do is call your attorney now. Call your attorney that worked with you for your child custody case to be able to sift through, talk about this child tax credit, how it affects your current order, and see if now is a good time to ask the court to change what was probably an afterthought and an assumption, a box checked on a form in your original order. And if you don't have an attorney and you want to work with somebody, call us here at Peterson, Burke and Cross. The attorneys here, all three of us have talked about this. I believe we've all presented on this in court already and sent letters out to advise our clients to try and really hammer down and get people to focus on what we can do to help you maximize the benefit that you can get from this change in the law. We do this at Peterson, Burke and Cross because we specialize in you.